Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 3rd, 2024. Hope you guys are having a fantastic weekend, and let's get started. So the Bulls picked up. They did pretty much what they've been doing. They held support and then blasted things higher. I'm not really quite sure what the catalyst was for Friday's big move, but I know the Meta was up a ton and a lot of the big seven, so that pretty much just carried everything. But it really, I mean, I was anticipating it just for the main reason that I was saying, we didn't have any bearish divergences here, and we, just using history as our guide, we haven't really seen any kind of important top made without any with any bearish divergence. So we have some here. We're getting into the overbought level, but the one chart that is kind of interesting, I don't know if it, right now we're just in kind of like a euphoria phase, and trying to figure out when, where it's going to stop is becomes a little bit difficult because everything just kind of gets thrown out the window. But, here's some trend lines, and these things are going back to 2023, in early 2023. And you can see, just using this trend line right here, we're pretty much right at it. So that's the first little obstacle right now that I see. We still have these sell signals in place, but the other one that's kind of interesting is this pretty big bearish wedge right here, where we're just about at the top of it, and you can see right here it's been following it the whole time. We had this little break, but that was pretty much it. So I mean, again, is this going to play out right now? Any bearish case has not played out, but we have to keep an eye on it. That's, because I refuse to run blindly, just believing that, everything is roses and rainbows, because I think it's anything but that. But in any case, we have this bearish wedge. If it was going to play out, really the target is looking all the way down near the 4,400 level. And again, we have these sell signals. So it's a pattern to keep an eye on. Really, I'm going to, until we see the bulls take out this the 50-50 level, the bears are going to, the bears take that out. The bulls are going to continue to try to just press higher. But this is really the first, say, the intermediate term bull bear line, and that's going to be right around that 50-40. If we take a look at the 60-minute chart, again, we're getting some bearish divergences right here. Now this little trend line is it's kind of looking where a top would be somewhere right around that 51.50 level. And again, I don't know if this plays out, but we've seen these patterns before, especially towards the top, where it turns into let's say, a bullish pennant that we had where right here, into a little bit of a smaller bearish wedge where we have 1, 2, 3, 4, and now we're coming back up. So this one would actually just have a target right around that 50, right, the important 50-40 level. So we want to keep an eye on that. Again, on the top part, we're looking right around that 51.60, so about 23 points higher if it's going to follow this. So let's take a look at the 15-minute chart. Again, this was the highest move up here. We could see it right here. So we have bearish divergences in place, and really, this is going to be more used just for like what the bears need to get through. And the 51.08, this is the first line in the sand. If they do that, then we have this support that's right at the 50.96. So let's say the 51.10 down to the 50.96 level. This is the support zone, the first one that the bears need to work through to even get any momentum going, because until then, this is just support right here, and if they break through it, now they're going to have to deal with the moving average support, which is right at the 50.73 level. But then we start getting into the important levels that I've been talking about, where, the only way the bears are going to get anything going is to get it through this support. And until then, everything else is just nothing. But we do have, like I said, these trend lines right here, we want to keep an eye on it because these are long term on it. And this is a fairly big bearish wedge that's in place, and it has a target right around that 43.73 again if it was to play out. But until we see support levels break, the bulls are going to continue to push higher, say that, the soft landing's here, everything's under control. And, most likely in the springtime when we're looking for that top, everybody's going to be caught off guard. But we have sell signals in there. The intermediate term charts that I've been showing you, the NIAID sell signal's been wiped out. So we could just throw that in the garbage right now and wait for something else to set up. But everything else is, pretty much the stocks above the 50-day moving average are lagging. We still have the put call ratio that's at pretty low levels right now. So we just want to keep an eye on things right now. Like I said, the important thing just to get any type of changing, short-term changing of the guard is going to be a break of this 51.10 down to the 50.96. If that happens, then it could open the door where we have another test. But this is the important support level, and that's the 50.60 down to the 50.40. Until this is taken out, it doesn't really matter about anything because the bulls are just continuing to ride this higher. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.